All right, so today I want to talk about another cool company in my portfolio called FuboTV. They are part of the streaming wars. As we know, there's Netflix, Disney Plus, Hulu, YouTube TV, Paramount Plus, Peacock, HBO Max. There's a ton of them. So what sets Fubo apart is that even though there's other channels on the platform, they really have this sort of sports first approach. That's how they're really trying to acquire their users and differentiate themselves. One thing to call out right away is you can see the 52-week range is as low as $8 to $62. This was a little bit of a meme stock for a while, but I got to be honest, the more that I've read about the company and watched interviews with their CEO and co-founder, I was compelled to become a shareholder. And definitely, I hope to hold for the long term, but I'm definitely going to address some risks associated with this company as well. So, what does Fubo do? They have the sports first live streaming approach, and what they've really been working on over the last several quarters is a sports book that's going to integrate within the app, and we're going to do a demo of that in a second to see what it looks like. During COVID, I think people really started to understand and realize how big gaming and sports wagering really are and how big they can become. But with that said, is this company just experiencing massive growth because of COVID and people are inside? They want to gamble, they want gaming, they want engagement, and this is a platform you can do that on. That's certainly a risk associated with an investment like this and something to think about. But let's check out what the demo looks like. Okay. Oh, this is from their earnings call where they showed this for the very first time. All right, so you get the drift. You can see that, whether you're watching the NBA, MLB, NFL soccer, all of these odds over here are changing in real time based on what's happening in the game and based on what channel you're on. So you can actually place live in-game wagers, which I think is going to be super engaging and a huge differentiator for this company and how they're actually going to acquire more users. Now, let's look at this. Okay, so there was FUBO reminder. This was a pretty good and insightful tweet that I found on Twitter. So this guy Andrew Friedman, CFA, I guess he's a FUBO bear, and what he's kind of calling out here is that even though the revenue per user is increasing, so is the cost, and you can kind of see the cost breakdown here and how FUBO has really ratcheted these costs up. Now, if we go to their quarterly filing and do kind of a search for subscriber related expenses, we can see year over year, it's gone from 53 to 120. So that's more than a double. And out of their total operating expenses, it's probably 120 over 211. It's probably almost 60% of their, probably 56, 57% of their total operating expenses. But even though their costs are increasing, I would like to call out that the revenue is nearly tripling overall, and the advertising revenue is almost quadrupling. And this is what I think is going to eventually lead to profitability for FuboTV. What I mean by this is the more paying subscribers they acquire, theoretically, the more advertisers will want to be on their platform. That means that's more advertising revenue for FuboTV, which is all margin for them. That comes at no cost, and that will flow right down to the bottom line. So long as FuboTV keeps coming out with engaging products and this live sportsbook takes off, the users should have a long-term customer lifetime value and be sticky over time, over a long-term time horizon. So, what do I really think of FuboTV? Honestly, it's still a hold for me. I don't plan on selling. I haven't sold any of my shares. I don't plan to. But, I want to give this at least a few more quarters to really see how the sportsbook takes off, right? I mean, the company just eclipsed over 100 million in revenue in Q4 for the first time ever. Then they did 120 in Q1, and they just did 131 based off an estimate of about 120. So really, they blew the estimates out of the water. But check the subscriber growth here. I mean, they added almost 100,000 users from Q1, during Q2, from Q1 to Q2. And their initial guidance in the beginning of the year was to end at around 800,000 subscribers. Now they're saying they're going to get this a quarter early and end, at over 900,000 by the end of the year, and almost double their revenues. So, for me, I think that FuboTV is definitely a good company to look at in the short to intermediate term. Again, it's still a money losing business. They're very much in R&D mode. They're very much in customer acquisition mode. They're very much in sales and marketing mode. But I definitely think there's this path to profitability, especially if the advertising revenue keeps growing at the clip that it is. I do think in the long term, they will eventually be acquired. Comcast comes to mind. They have a 9% stake, as do a number of other strategics, but Comcast was pretty late to the game in the streaming wars, and I think they just kind of make a logical fit and would really set them apart. I think this, it's interesting, right? It's like, this is not Roku, this is not DraftKings, it's not Flutter Entertainment, which owns FanDuel. It's not like regular cable television. It's sort of like this weird hybrid, but with this sports first idea. And I think that's what's setting it apart. I think they're going to continue acquiring users over time, but it is super, you have to be really keen on these results, because again, it's hard to tell if this is really organic or if this is just, if they're really benefiting from COVID. So that's definitely something to think about. But I plan to hold it for the next several quarters. If not the next, if they can keep this growth up, I'll definitely hold it for years. And eventually I do think I see them getting acquired. But let me know what you think. Do you think the business model is broken? Do you not like this business? Do you think they just started too late, in that even though it's an interesting concept, they're going to get crushed by bigger players in the industry? Let me know what you think in the comments, and thanks for watching.